Hello, everyone. Today we're going to be looking at our weekly recap. So, our first weekly recap and the first of many, I hope. So, today we're November 3rd and we're going to be looking into next week. So, from November 3rd until November 11th. So, next week, it's very important to note something. It's one of the most volatile weeks of the year, if not the most volatile, because we have the presidential elections on Monday. We have the I'm sorry, on Tuesday we have the presidential elections. On um, Thursday we have the Fed press conference and the Fed interest rate decision, and then we have the Michigan consumer. So it's gonna be a week with a lot of news, a lot of um, unpredictable movements in the market. So we need to have a game plan that's going to be way more theoric than actually practical, where we're going to take many positions. So this week, it's way better to just sit back and look at the market, especially if you're a swing trader. If you're a day trader, it might be a bit different. It might be a bit easier because day trading, you just need to avoid the major news moments. So when the news drop or like the phase during which the news are active, and you can enter after or enter before, um, as long as you exit before the news happens. So I'm just gonna give you out my game plan or like my view of the market of what may happen. Like we said, this is a week that is going to be extremely unpredictable because we have the presidential elections that are going to impact the market in ways that are very, very particular. We have the Fed rate interest decision. We have the Fed interest rate decision. We have the Fed press conference. So it's going to be very, very volatile. But let's get started. Okay, I want to get started with gold, which is the thing I trade the most. So here we have gold's chart. As you can see, I already did some uh, charting, but I'm going to explain to you exactly what I see in the market. So as you can see in gold, this is on the weekly chart. So every candle represents a week. The market has been very bullish since 2 years actually. It has been very bullish for the past 2 years, and it kept going up, and especially since around August/September, it has been incredibly bullish, right? As you can see, from August until September, we had a great increase and very little bearish price action. So, what we expect now, as you can see, there's a very, very strange candle here. It closed very close to the bottom, made an inducement here, so took out a high and then started dropping after. And if you traded the week, you would know that Thursday and Friday were just very, very bearish days. So, what I would expect, okay, is first of all on Monday to have a sort of retest on the daily, a sort of retest of that fair value gap. As we can see, what happened was we had our Wednesday close high. Then Thursday was just a very bearish day across all boards: crypto, the stock market, the indices, the gold, whatever. Everything was just very, very bearish. Market dropped very, very much. Went, created this order block, and created this inverse fair value gap. So we had a fair value gap between here and there, and since we closed below, we had our inverse fair value gap. As you can see, you could have entered here on the middle line of the fair value gap, and have your stop loss above here and just ride the trade at least to that level. But what I'm expecting now is for Monday to go at least go and retest, because we had two very bearish days in a bullish market. The minimum we can expect is some sort of bullish price action before the elections. So I would see something like that, market go up and then go back down. Not on the same day, but go up like this and then slowly go back down. Um, the election, what I would expect for the market to do is at least reach that imbalance before looking for any long. So I would want the market to go and reach that weekly fair value gap here before taking any longs. I won't be taking any longs unless we hit that middle line of the fair value gap minimum. Um, because we're very extended, and news, they tend to rarely continue the market. Usually news, they act as pivot points for the market. So I would expect, like I said, the market to go and retest that fair value gap or maximum that order block. If it goes below, above that order block, the game plan changes. So I would expect the market to go and reach that fair value gap and then drop back in that PD array, in that area of interest, that fair value gap. If it breaks below, which is most likely not going to happen, if it breaks below, we're automatically going to be extremely bearish. So the moment we break under it, I would enter on the short for an inverse fair value gap. So if the market does something like that, so we go up, then go down, break below the fair value gap, and then go back up, I would enter something like this. That's what I would expect for the market to do, or uh, doing the opposite. So going up, I'll be very bullish for Monday. So the market opens in about 6 hours or 5 actually. So I would be very, very bullish starting from that, um, at least for Monday. But again, what I would expect the market to do is do something like this for the week, especially since we're gonna have so much volatility. We're gonna be able to do something like that. There's gonna be enough money in the market to go and do such major price action. So that's what I would expect for gold. So bullish Monday and a drop to that weekly fair value gap at least before going back up. I won't take any positions after Monday until we reach that fair value gap, except for day trading, because obviously day trading you don't really need any um, higher time frame, major higher time frame like the weekly or the daily PD arrays or like the game plan. You just need to look at your daily, look at what's happening today, and take positions based off that. At least for how I trade. So this is for gold. The game plan for NAS 100 is going to be roughly the same. Okay, so here we can see I already traded it. We have this daily fair value gap that you can see here. Um, I would expect the market to really. This one is very, very like 60-40. I would expect the market 60% chance for it to break above it, retest, and then go back up. But it may happen that it breaks the fair value gap and then it touches the fair value gap and then goes back down. But what I would expect the market to do before anything is tap into that fair value gap, because now it's hanging above nothing. We had this inducement that happened, but it's still not enough for us to take a position off this. Um, as you can see here, we have our this fair value gap that is a weekly fair value gap right here, and it already had been tapped and then rejected, so that means it's a strong fair value gap. And we have also an inverse order block around the same level here. So I would expect the market to have some sort of reaction here and not just go through it. But if it happens to go through it, it's just going to become an inverse fair value gap. So if it just happens to drop below its trade, I would expect the market to go back into it and then drop further, because we have lows here that need to be taken. They're SMT, so those are from an SMT divergence. I would expect the market to go and reach those lows again. Um, hold on, I have it. Yeah, so I would expect the market to go and get those lows, and the moment it does, that's weird. Anyways, yeah, so that's what I would expect the market to do really. From that point on, and drop below. For Bitcoin, let me just get Bitcoin. it's a bit more complicated. We're on the verge of an all-time high. We created here buy stops, a lot of buy stops, because as you can see here, there's so many pivot points very close to each other, and this one took out all those highs, but did not take the liquidity of the final high, which creates a really interesting spot. So here we have equal highs that make the market, it's almost equal highs. Obviously it's not exactly equal highs, but it's almost equal highs. um so there's so much liquidity here, there's so many buy stops here, there's so many people that are having buy stops here, saying if the market breaks above that line, I'll long here. So many people. So I'm sorry, what we could expect the market to do is either go straight up, take out that high, and then drop. Okay, because this acts as such a big target. This is our target for Bitcoin. We don't want to long after it, but at least we want to hit it. We know we're gonna hit that price. So what I would like to see and I would expect from the market to do is go back to that weekly fair value gap. This is on the weekly time frame, by the way. Remember that. So I would expect the market to go and tap that weekly fair value gap and then go back up. As we said, we have a lot of volume this week. We're gonna have a lot of volatility and a lot of volume. So you have to look big. You don't want to have your areas of interest and your points of interest very close. Like, oh yeah, if it hits like that fair value gap, or here that order block or whatever, you don't want to have that very close, because the market is not going to respect it. It's going to go very far. The market is going to go very far from its initial point. You have the elections that are going to drop the market or pump it very much. Then you're going to have the Fed rate interest, the Fed interest rate decisions that are going to make the market pump or dump very hard. So that's what you have to keep in mind. What I would expect for Bitcoin, I'm not very big Bitcoin enthusiast. I'm more of a buy and hold, but uh, what I would expect the market to do is go down here, reach that fair value gap at least. If it breaks under it, obviously we're gonna try and take longs off it. And by the way, we don't take longs basically off it like that. For the weekly, if you have a weekly fair value gap, you're gonna drop on the 4 hour when it hits. When it hits the fair value gap, you wanna drop on the 4 hour and look for some sort of confirmation. So let's say it drops here. I'm gonna look for an OFS model that I taught you guys in the course. You wanna go and look for a model like that. So boom, boom, boom. Then you go back. You get ready to go and get the market back up. Okay, so this is what I would be looking for. Uh, a model to prove that the market is ready to go back up. So the moment you have this, you're ready to enter. Obviously, you might get stopped out because the market, like I said, is extremely unpredictable this week. But it's better than no game plan at all. And I would most likely not to take any swing trades personally this week, but I will be taking day trades. Day trades are different. You don't really need any. You don't really need to have any political knowledge about what's happening in the world to day trade. You just need to have good TA, good technical analysis, and avoid the times where the news drops. So 8 a.m. or like depending on the news, you want to avoid it. So that's pretty much all there is to it for this weekly recap. If you have any questions, you can ask them in the trading chat or ask them in private. Thank you very much, and I'll see you in the next one.